everyone, and welcome. Thank you for joining us to another exciting webinar hosted by Spain's Chamber of Commerce. It's always a pleasure to bring together professionals and leaders who shape the business landscape. Today, the webinar is titled From Spain to the US, Trade Finance Tools to Grow Your Business Internationally. My name is Yarela Callejas, and I will be the moderator for this session in collaboration with Abanca USA. Before we begin, and for those that are joining us for the first time, let me briefly introduce the Spain US Chamber of Commerce. We are a non-profit organization dedicated to helping businesses to expand into the United States by offering international business consulting along with events, networking opportunities, and educational programs. If you would like to learn more about our upcoming activities or explore additional webinars, I invite you to take a look on our website that is going to appear right now on your chat. Is www.spainuschamber.com or subscribe to our YouTube channel. Just a quick note, this session will be recorded, so you will be able to share this later with your colleagues or friends who you think will benefit from the insights shared today. At the end of the session, we will have a Q&A segment. Feel free to submit your questions at any time using the Questions tab that is located on the right side of your control panel. We'd love to hear from you, so feel free to send your questions or comments even during the panelist presentation. Today, we have Abanca USA, the international branch of Abanca based in Miami. Abanca USA is part of the Abanca Corporation Bancaria Group, a financial institution headquartered in Spain, with a strong presence across 11 countries in Europe and the Americas. More than 8 employees and turnover of 130 billion euros. This approach is centered on their approach is centered on flexibility and personal service, offering a well-structured portfolio of global and sustainable financial solutions designed to support both domestic and cross-border operations. Abanca USA stands out for combining personalized services with easy-to-use digital tools that make banking simple and efficient. We are especially pleased to welcome Juan Pablo Vargas, Senior Vice President of Trade Finance at Abanca USA. Juan Pablo has built an impressive international career. He began in 2002 in the Spanish Embassy in Athens as a market analyst, later joined Spain's Institute of Foreign Trade, ICET, in Madrid, and in 2005, he entered the banking world with Banesco, and 2 years later, joined Abanca as a director of trade finance. Since January 2023, he has been based in Miami, where he is leading the expansion of Abanca USA, developing new products and services tailored to the US and Latin American market. Juan Pablo, it is a real pleasure to have you with us today. Welcome, and if you are ready for your presentation, please take the stage.
Likewise, Yarela, thank you so much for having me here today. It's a real pleasure to be here with you guys. And yeah, first and foremost, congratulations on the chamber and everything you guys are doing. I think you're doing a great job. Yeah, from the title of the presentation is From Spain to the US, Trade Finance Tools to Grow Your Business Internationally. So we're gonna get to know a little bit about trade finance, a run through about our products and services, the current landscape, of course, within the international context. So Marta, if you want, you can move forward to. Yeah, we're going to explore a little bit as well about the role of the banks in trade finance, what we do, the traditional trade, the structured trade, and of course, at the end of the session of the webinar, I can take all your questions. I'm going to leave you my email address afterwards, so I will be more than happy to address your questions. If there's not enough time, hit me up. I'll be happy to reply and get back to you. So yeah, we're going to view the current landscape. What's going on internationally with the tariffs and so forth. Marta? By the way, I can take questions in Spanish as well, so don't be shy. Current landscape, what's going on? I would like to start my presentation by quoting Benjamin Franklin, the one and only Benjamin Franklin. He was one of the founding fathers of the United States, he was in favor of free trade. He said, no nation was ever ruined by trade. By the way, I recommend the biography by Walter Isaacson, a great book. I deeply recommend this book. So yeah, I mean, what's going on with the tariffs? We all know that Liberation Day, the current US administration issued EO, an executive order, trying to respond the large and persistent commercial and trade deficits with other nations worldwide. They deemed that they wanted to create, and I'm quoting, a level playing field for all the parties involved in trade finance, in global trade. They perceive a lack of reciprocity in tariffs, somehow discrepancies. They perceived this as a threat for the national security, so they issued this executive order. China, which is one of the main player here as well, retaliated, increasing the tariffs towards American imports. So as of right now, there is a suspension, there is a pause. Maybe the current US administration using the tariffs as a negotiation tools to get another things apart from these gains in international trade. Let's see. Everything is changing very rapidly, so we gotta pay attention to the news. What we know is that increase in tariffs can lead to an increase in inflation. That's no rocket science. As a matter of fact, we all know that Walmart CEO last week was commenting about that the increase in tariffs could lead to a higher pricing in consumer goods, the groceries and so forth. The president didn't like these statements. We saw like Moody's, which is one of the main credit agencies, downgraded the American credit rating. The pristine American rating was AAA, which is the impeccable rating, to AA1 with outlook stable. Who knows? Some say that this is a lagging effect from the previous US administration that is taking place right now. I don't know. The thing is that this could impact the efforts in cutting taxes and could send ripple effect in the financial markets as well. We gotta see. By the way, the Spanish Chamber published a very interesting booklet about how to cope and to deal with the increase in tariffs aimed to American companies and Spanish companies, of course. Very interesting reading. I highly recommend you guys to download the booklet, which is freely available from the Spanish Chamber. Great job. It's a very complex and sensitive situation. I mean, there's no simple reading to all what's happening. You gotta wait and see. If you go to a farmer who's growing, I don't know, soybeans in Idaho, Illinois, Minnesota, and you tell him that Chinese buyers are gonna be reluctant to buy by the way, soybeans, American soybeans are the main larger import goods into China. So this farmer is not gonna be very happy. He's gonna be unsettled. You're gonna tell him you gotta change your crop or you gotta change your buyer, because those supply chains take years and years and years and many decades and many administrations to grow and build up. But if you go to a fisherman who is capturing shrimps and you tell him that Mexican shrimp is gonna be much more expensive, he's gonna be very happy because now he can sell his American shrimps to local retailers and so forth and supermarket. So again, very complex, sensitive topic. We gotta wait and see what's going on. And again, as Ben Franklin said, and Adam Smith, I believe that free trade created a lot of wealth to the humankind. That's my take on that. Next slide, Marta, please. So yeah, the main topic here is trade finance, international trade. What is trade finance? Trade finance is an ample umbrella term for many services and products. We have traditional trade. By the way, we should start by mentioning trade credit. Trade credit, as opposed to trade finance, trade credit is when there is an intercompany agreement, so they sell on open account or cash in advance. Open account is with you ship your goods and then you get paid. Cash in advance, you get paid and then you ship the goods, ship the cargo through the ocean, through the Atlantic or whatever, the Pacific. So this is trade credit. There's no intervention from banks. So I understand that companies doing trade credit, they know each other very well. They've been doing business for a long, long time. There's a trust and they're pretty comfortable. But let's say that there is a company in Madrid who attends a fair and knows a buyer in Middle East or in Morocco. They don't know each other, so they want to secure their sale. So they use trade finance. Trade finance, we have traditional trade, we have letters of credit, documentary credit, we have guarantees and standby letters of credit, and we have lending for imports, lending for export, pre-export lending, post-shipment lending. I will explain to you later throughout the video in detail the services the role that banks have in trade finance. That's very interesting. And then we have structured trade, which is a little bit more complex. We have factoring, we have forfaiting, and then we have supply chain finance. And we have confirming, which is called reverse factoring, very interesting. Factoring and forfaiting are quite similar in reality. I will explain to you later in detail the differences between factoring and forfaiting. Yeah, Marta, next slide, please. Yeah, the main benefits, I explained this before, as opposed to trade credit. Working capital is essential for companies doing business, and especially doing business overseas. They need to cut the gaps between the sales. They need the working capital to purchase the raw goods, to ship the cargo, and so forth. And I think it's interesting to note, as opposed as traditional line of credit or loans, that trade finance focuses more on underlying transaction. This is the collateral to be pledged in favor of the bank or the lender. It's not balance sheet led. This is crucial and key to understand. It's self-liquidating transaction, meaning that the bank or the lender, again, settle the transaction, the loan, the credit with the product of the sale. This is key to understand the true nature of trade finance. Trade finance has a lot of attributes, a lot of stakeholders involved, a lot of different jurisdictions, regulations, interventions, a lot of documents. Document part is very burdensome. You have bill of lading, invoice, pro forma invoice, promissory note, bill of exchange, certifications, notarizations, complex, very burdensome. I will explain as well later on throughout the video how blockchain can help to mitigate this, or the modern technologies, the platform, the systems to mitigate this burden. So yeah. Yeah, the role of banks in trade finance. By the way, all of that I'm saying, we have available here in Abanca USA, in Abanca Spain as well, here in the US, in Miami. So the role of the banks are issuers of the method of payment. They issue the wires through SWIFT or through the internal ACH, automatic clearinghouse here in the US. They issue the method of payment and they settle the method of payment. In the case of letters of credit, documentary collections, they settle the payment. This is very important. Guarantor and hedge or risk mitigation. How does it work? We issue guarantees. I will explain the guarantees afterwards, the differences between the different types of guarantees, but we issue payment guarantees, advanced payment guarantees, bid bonds, many types of guarantees. When we confirm a letter of credit, that's a security, that's a guarantee as well for the exporter, for the company doing business abroad, because we confirm that we will pay, we will settle that letter of credit, no matter what. the bank, the confirming bank, in this case, Abanca, will confirm that Abanca will settle the underlying transaction, the export transaction. This is super interesting, super interesting. Lending, as we said before, the main role of banks in trade finance. In general, this is the bread and butter of the banks. We provide funds to fuel the international activity of our customers. We do short line of credit, short-term line of credit, import finance. We do pre-export, post-shipment. We do longer-term loans for capital goods related to an export transaction. And finally, we do advisory for small American companies, small and medium-sized Spanish companies. Many times they're not so knowledgeable about the techniques, the mitigation techniques, how to set up an agreement, many things, many loose ends when doing international business overseas. So many times bankers are advisors when it comes to international trade. So we have to be very knowledgeable about international markets, different places, different financial systems, different currencies, foreign exchange, fluctuations. So we got to advise to our customers. We're a very customer-driven bank. We follow our customers wherever they go. So yeah, the role of banks as advisors is key as well. So yeah, now we're going to explain a little bit more about trade finance products and services. First and foremost, the letters of credit. I wrote in a very funky way, the good old 3-in-1. A documentary credit or a letter of credit is a method of payment, first and foremost. It's a method of payment where the exporter gets paid by a bank, by the issuing bank. First and foremost, a method of payment. That's key. It is a hedging instrument. We can mitigate the risk of the issuing bank for our customer doing business abroad, as explained before, because we can hedge the risk of the issuing bank, a foreign bank. For instance, if a company in Granada or Puerto Santa Maria is doing business in Morocco and they don't know the buyer says, I'm going to issue a letter of credit in your favor issued by a Tijari Wafa bank. So our customer is going to be, okay, sounds good, but I don't know a Tijari Wafa bank. So he can go to Abanca, and Abanca will confirm the letter of credit issued by a Tijari Wafa bank in Morocco, meaning that Abanca will pay no matter what the underlying transaction, whether a Tijari Wafa pays or not. Our bank will pay. That's a confirmation of a letter of credit. Takes knowledge about the different countries, different regulations, financial systems, banks. And then the third part is a financial tool. Sometimes we have, not sometimes, many times, it's very frequent. We have what is called a deferred payment letter of credit, where the seller, the exporter, the company who is selling abroad is giving credit to their customer, to the buyer. So let's say we have a letter of credit which will be paid 90 days from acceptance, or 180 days, 1 year. So then the bank is able to discount that letter of credit, which is called forfaiting, will able to discount outside to the seller, to the exporter, to our customer, will discount the letter of credit outside. He doesn't have to wait to 1 year to get paid. He gets the funds immediately. This is called forfaiting. Again, a letter of credit as a financing tool. Sometimes we have promissory notes and bill of exchange in letters of credit as well. When those documentary credits are issued it's called negotiable letter of credit. So yeah, by the way, I'm explaining the role, the perspective of an exporter in letters of credit. The banks are able, our bank is able to issue a letter of credit to a buyer purchasing goods from abroad. This is where our bank, or the bank, is acting as an issuer. And then they get the letter of credit confirmed by another foreign bank. It works both ways, for the importer and for the exporter as well. Yeah, standby letters of credit. This is another bread and butter traditional trade finance or finance, as they say in the US. Standby letter of credit is different. It's a guarantee. The thing is that here in the US, sometimes, not sometimes, but many times, banks are not allowed to issue guarantees. So they took, in the 60s or the 70s, they took the commercial letters of credit and introduced a different wording to accommodate the guarantee. So those are standby letters of credit. They are guarantees. Guarantees. We have bid bonds, performance bonds, financial guarantees, cross-border guarantees for facilities. We have advanced payment guarantees, tender bonds, many types of standby letters of credit. Again, the bank can act as a issuer of the standby letter of credit. He can confirm the standby letter of credit issued by another foreign bank. Yeah, this is more or less. By the way, I should say that these techniques are also applicable to domestic trade, but domestic trade here in the US and worldwide is local trade is always an open account trade credit, as I said before, open account or cash in advance. But those techniques can be also applied in domestic trade. We can see local standby letters of credit issued within the US, within local counterparties as well. Again, here in Abanca USA, we're able to issue local and international standby letters of credit. We're able to confirm and to receive standby letters of credit. Lending, traditional trade, import and export lines of credit, pre-export finance. This is called also leverage finance because the bank is funding the customer who's prior to the shipment to purchase the raw material, the goods. Then then the export is after the shipment. If he's giving credit to his customer, the bank again is paying outside to the customer. He doesn't have to wait, let's say 120 days to get paid from the buyer, sorry, from the importer. At maturity date, the bank will settle the line of credit with the payment of the buyer. Import finance, as I said before, these products and services also are the importer, the buyer, the business abroad can benefit from those services. In import finance, the bank is paying the foreign seller, the foreign exporter, and then at maturity date, we will settle the line of credit with a payment issued by the importer. So yeah, I have to say that I will explain later on throughout the video how banks underwrite the risks of companies. We usually are asking for financial statements, balance sheets, P&L for 3 years, tax returns. We will understand very well the underlying transaction, the goods, the country risk, although the risk is not with the risk is always with our customer. We gotta understand pretty good what's going on, the goods, the foreign customers. So yeah, that's super interesting as well. Now we have what is called structured trade. We see supply chain and forfaiting. Supply chain, we have in Spain it's called confirming, reverse factoring. We do confirming as well, international confirming. We pay to the foreign sellers to our customers. We've been doing for many, many years to our textile customers in Spain. We have a very developed system, platform for international confirming, supply chain. At the end of the day, we try, bankers, we try to provide liquidity and funding to all parties across the entire supply chain. So this is, we can use different fancy names and acronyms, but at the end of the day, it's as simple as that. So we provide funding to our to the foreign sellers of our customers, purchasing goods and materials from abroad. Then we have forfaiting and factoring, where forfaiting is more, you can use factoring for domestic trade as well. Forfaiting much more for international business. Forfaiting is always on letter of credit, promissory note, and a bill of exchange. Is always on a negotiable instrument. Factoring is different instrument. Can be an invoice, it requires a letter of assignment and acknowledgement. It's much more burdensome. The tenor for forfaiting is longer, while for factoring is always short term. It's 90 days, 120 days, while forfaiting is always 1 year, 2 years. You know. By the way, yeah, forfaiting is always non-recourse. Factoring can be non and with recourse to the assigner, to the seller. Yeah, I mean, this is in a nutshell what is trade finance, what we do as bankers, what we do here in Abanca USA, the current landscape in international business worldwide. And yeah, I will be more than happy to take all your questions. As I said before, you have my email address. I will be very happy to get back to you if we don't have enough time. Yeah.
Thank you so much, Juan Pablo, for that insightful presentation. We have given us, you have given us a clear and practical view on how trade finance and can truly empower businesses to grow across borders. Thank you so much. So now let's move on into our Q&A session. Now is the opportunity that everybody have now for if you have any doubt or you want that Juan Pablo clarify something, this is your opportunity. And actually, we have some questions already. The first one is going to be, what are the main types of risks facing exporters?
The type of risk that an exporter is facing when doing business abroad. That is a very good question. First and foremost, as I said before, country risk, which is the risk inherent to when you're dealing with emerging markets. There are always some circumstances that can impede, can prevent the payment due to political, economical, and social conditions, factors involved with the currency. So country risk and political risk, that's one of the, if not the biggest risk factor when doing business overseas, especially in emerging markets. And then I would say commercial risk, of course, of your buyer. That's the risk of default by your buyer, the risk of cash flow troubles. You don't get paid in time. What else? Currency risk, of course. Currency risk. That's very important. I mean, you have to bear into account that there might be fluctuations between your currency. So again, as bankers, we provide services to mitigate all those risks. In country risk, you can confirm your letter of credit. With a commercial risk, you can again do forfaiting, and for currency risk, you can do a FX hedge or swap or something. As bankers, we're very used to that. So yeah, that would be, in my view, the three main risks inherent to an export transaction. Of course, then you have, factors of the different nature of nationalities. When you're dealing with a Chinese customer or a customer in the Middle East, or a Japanese or a Scandinavian person, they're always different things. So you got to understand, you got to navigate through those factors as well. But let's say that from a purely financial perspective, the country risk, the commercial risk, and the currency risk.
Thank you, Juan Pablo. I have another question. Do you have a referral agreement in place? This person is interested in working as an intermediary and referring potential clients.
Yes, we have in place referral agreements, both for trade finance and for lending, commercial lending, and also for the deposits. I mean, we as bankers, we need to fuel our lending activity with deposits. So yeah, we have a referral agreement to tackle all those angles. Yeah. again, you have this person, I mean, you have my email address, and we're more than happy to refer you to the referral person. Yeah.
Another question. What are the differences between standby letters of credit and commercial letters of credit?
Yeah, I was talking about this before. He's asking the main difference between commercial.
Between standby letters and credit and commercial letters of credit.
First and foremost, a commercial letter of credit is a method of payment, and a standby letter of credit is a guarantee. First and foremost, that's the main difference. Here in the US, many banks are facing limitation when issuing guarantees. By the way, a Banca USA can issue standby letters of credit, and we can issue guarantees as well. But again, many banks are facing a lot of troubles when issue guarantees, so they have to use what is called a standby letter of credit, SBLC, which is a guarantee. They use the format of the letter of credit. They change a little bit the wording of the commercial letter of credit, and this can be used as a guarantee. So they can send the guarantee to a foreign bank. They can receive a standby letter of credit from a foreign bank, can confirm the letter of credit. So yeah, but again, bear in mind, commercial letter of credit or documentary credit is a method of payment. Standby letter of credit is a contingent guarantee.
Thank you, Juan Pablo. Another question. What is the difference between factoring and forfaiting?
Yeah, I saw that coming too, because my explanation before was a little bit sloppy. I mean, in essence, it's the same. Factoring, you discount the receivable. Forfaiting, you discount the receivable. Now, the instrument is different, because in forfaiting, you use a promissory note, a bill of exchange, or a letter of credit. You use a negotiable instrument. You can endorse the promissory note. You can endorse the bill of exchange. You don't need an assignment, acknowledgement. In a factoring, you need an agreement. You need an assignment, a separate agreement from the instrument itself. And then you need acknowledgement as well. What else? I would say, yeah, I mean, forfaiting, you can discount 100% of the face value of the instrument, while in factoring, you go only up to, I don't know, 80%, maybe. Forfaiting is used in international trade, only in international trade. Factoring can be used in domestic trade as well as international trade. So, what else? The tenor, yeah, the duration, the tenor is different. From factoring short term, forfaiting can go 1 year, 2 years, 5 years. I've seen forfeiting transactions for up to 5 years. There is a secondary market for forfeiting, huge liquid market, and you don't see secondary market for factoring. But yeah, that will be the main differences between forfeiting and factoring. I think there's plenty of more differences, but yeah, in a crude nutshell, there's very similar, but there are differences as well.
Another question for you, Juan Pablo. What pitfalls should be avoided in international guarantee agreements?
Can you? I didn't get that. Can you?
What pitfalls should be avoided in international guarantee agreements?
Pitfalls.
Yeah.
There are many pitfalls. I mean, you gotta be sure in international guarantee. This is a very ample question. I mean, there are many pitfalls, not only in international guarantees, but international trade and on a daily basis. You gotta make sure that your guarantee, I have to see the guarantee. I have to see if it's a bid bond or advance payment bond guarantee. Many pitfalls. You gotta be sure that the wording of the guarantee reflects the agreement of the contract, the tenor, the maturity, the execution clauses as well. So you gotta be very thorough when reviewing the agreement. Many pitfalls. You gotta wanna hire a dedicated and knowledgeable lawyer, legal advisor, to make sure that you won't make any mistake. I mean,
Thank you.
again, this person can address me afterwards by email, and we can tackle this in much more detail. But this is a very ample question. Many pitfalls in international
Yeah.
trade because there are many documents. It's very burdensome document-wise. So
Another question. Can you explain the role of the multilateral bank in the context of trade finance?
multilateral banks, yeah. Multilateral banks. First of all, I mean, multilateral banks like international IFC from World Bank, IDB, Inter-American Development Bank. I know the Asian Development Bank and the Asian Development Bank and the African Development Bank. Those are the main multi-development banks. So they have special programs dedicated to boost trade finance internationally. So they're able to issue, they're called global trade facilitation programs in IFC or trade finance facilitation programs in IDB, which is based both of them in Washington, here in the US. They're able to issue guarantees to banks. For instance, you have a letter of credit who is issued, opened by a bank in Kazakhstan, and I don't have lines of credit to accommodate that risk. Then I can call them and tell them, I have a letter of credit issued by this bank here in Kazakhstan, or I mean, not Belarus, but you know, wherever, in Kenya or, and are you able to accommodate the risk? Can you confirm on my behalf this level of credit? And they have lines for those smaller banks, emerging markets, sort of funky names. So yeah, that they play a huge role helping banks to again to confirm those letters of credit. We in Abanca are members of IFC Global Trade Facilitation Programs. We're doing business a long time ago with them for quite a while. We're members of the IFC, IDB programs, and we've been using their confirmation letters of credit because they have a very dedicated team to understand those countries. So they can give us a hand on that regard.
Thank you, Juan Pablo. And in light of the Liberation Day, how do you see its impact, if any, on trade? And where do you think trade with the US is heading?
So again, the tariffs. I'm in favor of free trade. I'm not. You know, we cannot. It's a very complex situation. We're running through a very difficult times. The current U.S. administration is trying to do the best for the nation. I'm pretty sure that at the end of the day, as I said before, all those supply chains take years and years and years to build up. It's very hard, and many administrations to build up. So it's very, you know, I'm not able to predict any. I trust that everything's gonna work out fine in the end. Trade is vital from worldwide, for US, for China, for Europe, of course, for Spain, for France. I think that everything is gonna come to terms sooner or later. But again, I'm not able to make any prediction. Sorry. I don't know. I mean, I don't know anyone who can issue a very formed and firm opinion on that. I don't know, but I hope for the best.
Yes, we all hope for the best.
Yeah.
Another question: does Abanca offer any specific financing tools for startups or tech companies with international clients?
Yes, we do. As I said before, we will for a startup. I understand it's sometimes it's difficult to acquire the capital to fuel their activities and so forth. We have to review to make an underwriting and an appraisal of the financial statements, the balance sheet, the P&L, the tax returns. We got to understand their underlying activity, the underlying transactions. What are they selling? When are they getting paid? The instruments they're using. We got to understand the jurisdiction. By the way, this is very short. It's a very short presentation and left out a lot of key things as well for trade finance, like a BSA, KYC, AML, the Exim Bank, the SBA here in the US, that's key as well. The blockchain, so many things. So you gotta understand the jurisdictions involved to avoid, OFAC troubles and so forth. You gotta understand, you make the underwriting from the credit perspective. For a startup, we can have a look at it, but I would recommend them to go to SBA or maybe Exim Bank. They have specific programs tailored to startups doing business, doing international business.
Perfect, Juan Pablo. In the audience, we have a lot of people who are planning to climb into the United States or are pursuing goals to export for the first. What advice would you give to a company exporting to the United States for the first time from your financing point of view?
I would say that American companies and American buyers are very reliable and trustworthy. You don't have to use sophisticated trade finance services and products such as letters of credit or something like that. First and foremost, you gotta understand, you gotta meet your customer very well. You gotta know him very well. You gotta be sure to fulfill his order, his PO. But again, American companies are very reliable. They're willing to offer good credit terms if they're willing to. Trustworthy companies, a huge market here in the US, from the north to the south, different coasts. Yeah, great market. I mean, this company won't have any problem, nothing whatsoever. But again, you gotta make your homework to make sure that you don't make any pitfall, as we said before.
And actually, I have another question that is related to the previous one. It is necessary to have a local presence in the US to work with the Banca USA. Maybe the company is still in the United States and they don't really need to, or they don't really are in the. Sorry, they are in the Spain and they are not with an office or anything yet in the USA. Is necessary to the company to be in the US?
It's not necessary. As a matter of fact, we've been doing business with foreign companies as well. If the company is in Spain, a Banca Spain can accommodate their request, that's for sure. But it's not necessary. The only thing is that we have to understand the underlying business, the financials of the company. Again, from a BSA, KYC, AML can be a little bit more burdensome and cumbersome because the regulations here in the US are very strict. But no, we can onboard foreign customers as well. Yeah.
Thank you.
No
can you explain the role of the multilateral banks and in the context of trade finance?
No, Jarela, I said I think I replied that one before when I spoke about
yes, we have it. Yeah.
Inter-American Development Bank, global trade facilitation programs.
Yes, and another one. What are the common guarantees types in the trade finance?
Sorry, what was that?
What are the common guarantees types in the trade finance?
Yeah, that's a very good question. We have plenty of different types of guarantees. We have, for instance, bid bonds, when that makes sure that the bidder who's winning a project is going to sign the contract, the agreement. When doing infrastructure projects, this is a protection to the body who is organizing the bid or the tender. Then we have performance guarantees, protecting the buyer, who's to make sure that the seller is going to deliver. There's a performance. That's called, hence its name, performance guarantee. This is a protection for the buyer. Then we have an advance payment guarantee. Again, this is a protection for the buyer who is making a payment in advance, and then if the goods are not received, then the bank will settle the amount with our customer, that in this case is purchasing goods from abroad. We have payment guarantees as well. This is a protection for a company selling goods overseas, and if the company doesn't get paid from the buyer overseas, then we settle the bill, the invoice. This is a protection for the exporter selling their goods overseas. Many times, Jarela, many times there are other banks involved as well. This is many times we need correspondent banks to issue guarantees in foreign countries. That's why we have a very huge network of correspondent banks. We can, issue the guarantee with them. We can advise their guarantees here in the US or in Spain. Many types of guarantees, and we have as well guarantees for credit facilities. We issue a guarantee or a standby letter of credit from a foreign bank, and then we can provide liquidity to a local company, and we use the leverage of this foreign bank who is securing our loan to the local company. This is called it doesn't have a specific name, but this is a guarantee for credit facilities. We do that as well here in the US. Many types of guarantees, so bid bonds, advance payment, payment guarantees, guarantees for credit facilities, performance, of course, that's key as well, performance guarantees, yeah.
Thank you, Juan Pablo. I believe we have covered all the questions already. We hope that this session gives you valuable insight on how to the trade finance tools can help you to expand into the United States and internationally. And a special thank you to Juan Pablo and the Abanca US team for sharing their expertise. If you have further questions or you would like to connect, feel free to reach out. You have already the information of the contact information, so you can contact Juan Pablo for more detail. And don't forget that this session will be recorded and it will be available soon, and you can share with your colleagues. And if we are looking forward for another webinar. So that is everything for now. Thank you, Juan Pablo, again, and see you in another webinar.
Sure, and congrats again to the Spanish Chamber. Thank you so much. It's been a real pleasure.
Thank you. Take care, everybody. Bye-bye.
Take care. Bye.